Welcome to the Traders Show. This episode is brought to you by PaperStone.
Hello traders, welcome back to another episode of the Traders Show. In today's episode we're going to be talking about backtesting, but as you've already spotted, we have changed where we normally have these episodes shot. So today we're going to shoot in a different location. Precisely, we're in our offices, so we decided to just change up a bit, test some new things, see how things will move, and then we can probably go back to the other one. We'll stick with a new format that we'll be using. So my name is Akian, and before we start off, I'll let my colleagues introduce themselves, and then we'll move on to the next topic.
Hey guys, welcome. As Ken said, welcome to the new show. We're trying to change things up a bit, and market-wise, things are fine. For those, sorry, I forgot to mention, my name is Caleb. For those who do not know me, we're going to talk about backtesting, how it's helped us in trading. When I discovered how to backtest, actually Taras is one who came up with this other software. Not really came up as in created, but he found this software that we're using, that we use. And I remember telling him, Taras, you've saved us a lot. We spent a lot of time just trading without actually backtesting our system to see if it actually works in the market. So today we're going to share with you guys why it is important, how you can do it, things to look for when you're backtesting, and more or less that's what we're going to talk about. In the markets, things have been well. Markets, volatilities in the markets, things are really picking up. Gold, we've been seeing gold sort of trying to rally to the upside. Dow Jones and the stock market, that's S&P 500 and the US 100, we've seen them really picking up after having a very deep decline for the past almost 3 months, for a very long time. So I think it's starting to pick up a bit. The dollar has also corrected quite a bit. Still dollar long because a lot of things are still happening, but we've seen that correction coming in. So those are things we're watching in the markets, taking positions in relation to that, both in the short term and putting in perspective the long term, what we're expecting in the market. But for today, I don't want to get really deep into the market, so we're going to talk about what Ken said, the back testing. If you want to follow our trades and what trades we're taking, we normally do a live Zoom session every Monday, Wednesday, and Friday, so you can check that out, and we always put it on YouTube. So go and check that out. But that's it from me. I'll let Taras introduce himself.
Greetings traders. So welcome to another episode of the Traders Show. As my colleagues have introduced the topic, back testing. This is a topic I never knew about it since I started trading back in 2016, and I came to know about it almost 3-4 years into my trading. So I believe, as we always do, we help traders learn about trading. So this is a podcast to really help a lot of traders understand how to statistically develop their trading strategies. So most traders begin trading without that statistical analysis, and they end up not having confidence in their system, and that is why most traders end up system hopping or even just quitting trading. But when you understand backtesting, you test your strategies, your setups, time frames, which currencies work for you, which currencies don't work for you. Are you a contrarian? Are you a trend follower? You need to test all that. So I believe we will talk deeply about it, about importance of backtesting, why you should backtest, what to backtest, and also how it can also help you improve on your trading.
PaperStone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. PaperStone Markets Kenya is regulated by the Capital Markets Authority. To open an account with PaperStone and begin your trading, click the link on the description below.
I think I'll let Ken start off, then we will continue like that.
Okay, so to start us off, I think I'll start with a personal story, like you guys have said. When you normally start out in trading, the basic idea of how most people jump into trades or start trading is you hop on YouTube, you see someone trading in a particular way, you just go back to your charts, try doing it, and all of a sudden you're placing trades, right? Or you've read a book, you've seen someone made a killing using a double top strategy, or like the way you had seen Paul Tudor Jones made a fortune in 1987 using Elliott wave, and then you decided, now from today I'm going to be an Elliott wave trader, right? That's how most people approach markets, but that's very, very wrong. For you to approach markets in the right way, which is one of the most important things, it's very, very important to bring in what you're going to talk about today. So to start off, personally, when I started trading, my approach was I'd take trades based on different things which I thought were edges. Or my opinion was, there's an edge trading this system, or actually I never had a system. I just had patterns which I thought, if I see this pattern, I'll take a trade. I never had the judgment of knowing this is a good trade, this is a bad trade.
Yeah.
I should be in the market now, I shouldn't be in the market now. But as you develop, and that is one of the most important things for a trader, you come to a point where you now have a working methodology that you have backtested, or rather that you have tested over the years. So one of the points that I'd start with is for people who are out there who are currently watching, or for someone who will just come across this information, one of the most important things to do is to put your opinion aside and to test whether your opinion has been working or has worked in the past. For example, for me, how I developed my backtesting or how I approached backtesting is from the opposing side. So what really happened was I was trading, observed I'm making money on a particular pattern, and I'm losing all that money in other patterns. Then I decided, let me just test out this pattern. Why am I making most of my cash from this pattern? So I went back, ran the tests, and concluded this is the only pattern I should be trading, and that's how I started now trading that pattern. So it's very, very important to put your opinion aside, what you really think, because you could have an opinion, this market is overbought, this market is oversold, but have you tested those indicators to see if this indicator tells you it's overbought, it's time to sell, or it's oversold, it's time to buy, or you're just basing that on your own personal opinion? If it's your personal opinion, there's no edge, there's no advantage. But if it's tested and there's an advantage, then there's something there. So I'd start off with the value of putting your opinion aside and testing out whatever methodology you have, or whatever idea you have of how markets work. Test it out to see if it works well. So take for example a guy like Ray Dalio. Ray Dalio has developed a method that is focused on just trading around economics and cycles that exist in the market. So if you look at, for example, one indicator that I assume he normally uses is interest rates. What happens with interest rates? What are the Feds doing? I'm sure he has tested to see if the Feds lower rates, stocks probably will go up, commodities will rally, this and this will go down as an effect of that. If rates are going up, this is the effect. This is what is likely to happen, and this and this and this. So he has created a method or a system which focuses on different economic environments and how assets behave in those economic environments. And he has tested them for a very, very long time. In fact, Jack Swagger was saying he's the only trader he's met who has over 500 years of researched data across all markets, not just in the US market. He has tested across the world. Like he knows even emerging markets. Do not be surprised he has the data for probably the NSC better than most of the people who are even trading the NSC. So that's his advantage, that's his edge, and that's the only way you can also believe and have confidence in your system, because you've seen it make money in the past, so you can expect it to make money in the future.
Exactly, and I think that is where, just as you said it, probably just explaining what is even backtesting. And as you said, it's basically going back to the past to test the strategy, the setups maybe you're trading, the patterns you're trading, the indicators you're using, the time frames you're trading, the entry signals, exit signals, and all that. Basically testing all that in the past, not even, and that is the problem most of us, as you said, we do. We come into the market and start for testing without backtesting. So the first or the most important thing in trading is not even to start putting money on trades. And that is one thing, but also I always say is you only learn by making those mistakes. Because in 2016, 2017, we didn't know about backtesting. 2018, we didn't know about backtesting. And also I believe it's also because there was sort of a gap in the educational space. No one was even there to tell you please backtest. So for us to be on a two in as Ken said, read a few books from the library. Went to Baby Pips, learned a few things, deposit $300.
How did you discover backtesting? How did you get to know that we need to do this?
It was Vantap.
I was calling them trade simulations. So you need to simulate your trades first before you put money.
It was that book of position sizing.
It was position sizing.
The big
and
one.
Also, I think it came to, it was also the fact that you notice that you've been trading for almost 4 years, but you're still not consistent.
Exactly.
You see, so we realize that there's something we must be missing out. And when you notice it's backtesting, is when all of us now went into it. And I believe it's changed
a lot
about our trading results, how we approach trading, our trading beliefs, and all that. So for me, I believe first of all for people to understand even what is backtesting. And for new traders to understand that you actually start from backtesting before you even think about raising capital to start trading. So that is also just to add on what Ken was saying, just to explain what is backtesting. Then I think we'll go into the importance and how to backtest and all that. I think had you finished?
Yeah.
Okay.
Yeah. So I think because both Taras and I touch on this when we were teaching. So Taras touches on it a bit in his class for risk management.
And also trading.
Also for his strategy, he tells people, also can touch a bit, yeah. But then I have a class towards the end, because now as we are finishing, because if you come for a course, we'll teach you our strategies, we'll teach you risk, philosophy, and all that. Then towards the end, we have how to create a trading plan, how to journal, and how to backtest. So all these are all intertwined together, and I like telling my students that before you trade, before you, like you're saying, before you go live, there's a process. You're backtesting, then forward testing, then you actually put it into actual testing. Okay? So by backtest, you're going back into time. Test your system and see how it creates data. So what data are we looking for? POF, pattern occurrence frequency. How often does your pattern occur within a month, within a year? It's very good for projections and to prepare ahead. Number 2, what you're looking for, hit rate. What is the hit rate? I'll get 10 trades per month. Maybe I have a 50% hit rate. So that's 5 winners, 5 losses. So you already know on average, you might get 5 winners, 5 losses if you get 10 trades. Number 3, what you're looking for, hit rate. I mean, risk reward ratio. Your average profit factor. If it's 1:2, that means on average you're risking 1 to make 2. You might get it's 1:4, whatever. Okay. Then after that, now you're coming to look at what is your consecutive wins and losses. Which pairs does your strategy work best in? Which market, in a bull market, bear market? Like mine, I've been doing back testing. It's working very well in bull market. So when I'm taking opposite trades in a bull market, I tend to, those are the losses I'm losing, and I'm learning to create a rule where you don't want to lose in a bear, you don't want to lose betting in a bull, selling in a bull market. I'd rather lose buying in a bull market than lose selling in a bull market, and vice versa. I don't want to be losing buying in a bear market. Make sense?
Yeah.
So I tell people we have to do that. Now once you compile that data, remember, I'll also come and talk a bit of some disadvantages that come up with backtesting, which are not comparable, or when it comes to real testing, it's totally not the same. So you do that for backtesting, you get that data, you compile it, you'll also see the trajectory of the graph. Okay, so you can roughly estimate how your growth over time, but that's more or less on the back test. Okay, come to forward test. Now forward test, and this analogy I like using is a lot also on guys for anatomy and guys in medicine. When you go to medicine school, before you go live, and live is doing real money, now live in medicine school is treating a real person. Utakomi treat kwanza dead animals. You're learning the anatomy. This is the demo account now. You're just doing that. The rats. Then you'll come now deal with now live animals. So you're now testing live animals. Before you come and you're given a real body to work on, you've gone through years of doing this now, sort of like a back test. Knowing what works, what doesn't, how to do things, how not to do things, before you work on the real body. The real body. Now, same analogy, take it into trading. Work on this back test. Then the real animal is now your forward test, where you can still use your real account, but not a big account. Now you're still testing to see, okay, in a real market. Because now the disadvantage of saying when you back test, it's more of a simulator which discounts the amount of time you take in a trade. So you've taken a trade in the back test, within 2 seconds, a day has already passed. You already know the outcome. Okay. In real trading, you need to take a trade, wait for the whole either day, 2 days for it to pan out. Number 2, another disadvantage on the back test, when you're back testing, you're really looking at you're not paying attention to the time. So in back test, you can take a trade at 2 a.m. You didn't know it was 2 a.m. You just saw, unless you're paying attention to that. So you need to pay attention to the time, because when it comes to real market, you might be wondering, why am I not getting trades? Kumbe, the time frame was different. So those are the things you really need to look at, and that's now on forward test. You're coming to test, okay, what is, now also in forward test, you're introducing what? Psychology.
Yep.
Okay, so now
that is actually one of the biggest differences.
Exactly, that's one of the biggest
back tests
and forward test, and now real testing, trading the market. You've brought psychology into the market. You're putting real money at risk. So you want to see, how am I comfortable with this? Can I really hold for that long? Can I, all those things? Am I fearful? Am I greedy? Am I cutting winners very early? Am I still holding into losers, hoping they'll turn into a winner? So those are the things we really want to pay attention to when you come to forward test. Now, once you have found that the forward test is in sync with your back test, now is when you have a trading system.
Yeah.
You get now this is the hard part of trading. This is where the work is. You're going to sit on this. You'll be forward testing. It's not working. You're going back to back test, going back to the drawing board and all that. Now, when I was saying you compile this with a trading plan, when you back test and forward test, now you'll get a plan on how you're going to trade. Okay, you've compiled data, you've tested the data. Now you have a roadmap of how you're going to get to the destination you want. Because when it comes to creating a trading plan, for me, my definition in trading plan comes down to two things. What is your trading goal, and how do you define the strategy that's going to help you attain the goal? Okay, so that's what I teach people in my class. So my goal is to make 10% in that month. Okay, with this data you've compiled from back testing, can it help you achieve this goal? If not, what do we need to change? Go back to the back test, improve something, or change your trading goal. Maybe your trading goal is too ambitious, 20%, but your system can only return 10%. Lower, okay? Look for more capital. You'll make. Okay, so those are the things we look for, trying to strategize. And on top of it, to top it off, we're also having the journaling. Journaling is one of the best ways to also get to improve the system that you want to backtest. Like Ken is the one who helped me also come up with what I need to backtest. So he came and told me, okay, Caleb, can I see your journal? Then I showed him my journal. Then he's like, let's look for the trades. Now this was when we were starting the backtest. Let's look for the trades that are giving you most money and the ones that are giving you least amount of money. So we came down and found, okay, these are the ones that are giving me money. Is this ingine? Let's do away with it. Yeah. Let's focus on what's giving you money. And that's now. And I took that, and that was from my journaling. And journaling, you're taking the photo. When you take any trade, when you're looking at the markets, take a photo, a screenshot, okay? Save that. It's a very important data. If you have for a whole year, you'll have a lot of data to compile, okay? Now, once we got that system or that strategy that's working, what do? Backtest. Yeah. Backtest, get that data. Create a trading plan, test that, now trade it, okay? So it's that. It's a very monotonous sort of back and forth work, which might seem a bit boring. Real trading is boring, but that's where the money is. So in a nutshell, that's what I teach in my class. And yeah, that's where I can start.
Good trading is?
Boring.
Exactly.
It's not exciting.
It's not exciting. It's not action. The work, because I tell students, the work is in the back test more than you're going to buy and sell.
Yes, true.
Yeah, because that's just a button. PaperStone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and quick execution speed.
Mm-hmm. And now when you look at, trading comes with thrill. Like trading comes with, it stimulates, what is this? I'm forgetting the name.
Devil in the mind.
Yes.
Dopamine.
Exactly. Like the moment you are at risk, your dopamine levels rises.
Yeah.
You see, so, and sort of in a good way and in a bad way. When you're winning, it comes in a good way. When you're losing, it comes in a bad way. And I think that is what makes a lot of people now start getting addicted, not even in trying to develop their plan, their system, but they're already trading. Exactly. And they're not just trading like 1, 2 trades, a lot of trades. They're trading every day. They're trading multiple trades per pair, taking big risks because it brings that thrill, that
adrenaline.
Yeah, exactly. That adrenaline rush. So I think that is what most traders need to first of all understand that for you to even start making money, you need a lot of confidence in the system. And for me, one thing I can say about backtesting is it gives you a lot of confidence. Yeah. Because you've tested, okay, not that it will work 100% like how we backtested, but you've tested, let's say, gold for almost over 10 years. Even maybe for me, I did about 17, 18 years of data. So I think from 2003 to 2020, around there. So that's about 17 years of data. Testing just one pattern. You see, and the moment you see this pattern actually has a good average hit rate, a good average risk reward and a good hit rate. Pattern gives you, from backtesting, gives you about a 60% hit rate. Your average risk reward is 2.5. The frequency of trades also not too bad. You know that you're spending some months, maybe you can't get trades. So the frequency of the times you get into trading is also average. And that now comes to also you following your plan. Because you can't follow a plan that you're not confident about it. But most times you will tend to.
You can't even craft a plan.
I'm not even sure.
You don't even have the data.
The data.
And that's how we used to do
Exactly. I always think about it. Like, how did you sit down and come up with a plan and you didn't even know which pattern you're going to trade?
Even if you knew, maybe you knew a pattern, but you didn't have statistical data about it. You didn't know how many times does this pattern occur in a month, in 2 months, in 3 months. You didn't know how to maybe set your stop losses well in the pattern. You get maybe you're putting your stop losses too tight and you're in the right direction, but you're being stopped out because maybe of your stop loss placement
too tight.
And I think from backtesting, that is what actually one of the things that really helped me. I came to understand how to put my stop losses in levels whereby I'm sure if this is a level whereby if market gets to that level, I'm truly wrong. You see, so I'm not trying to squeeze my stop losses. Exactly. Because you also need to understand that you need to give market room for its volatility, especially in such current market environments. Interest rates are coming up. So kitambo, I used to just put let me put a 25 pip stop loss. Actually, just guessing from the number. Not even from a pattern like this place is a place whereby liquidity has not reached. So maybe let me put my stop losses above here. So you just trade, okay, let me look for 25 pips stop loss and I'll aim about 75 pips. You don't even know how to set your
1:3.
Just look for 1:3 from your own thoughts.
And that's the same mistake I was telling Ken, our friend. Remember I was telling our friend just kept like a stop loss, then and after 1:10.
Exactly. So
immediately,
it's a disease that a lot of us we don't even know that we are facing it. You just cause also
it's a disease.
A disease. Another thing about why people don't backtest is because the system they're trading sometimes gives them winners. So they get stuck into okay, I win another time. So let me just like it can come again. So basically, it's trading from luck. Because sometimes you get some winners. I think all systems, even just from guessing, you can win.
When you're starting out,
you
have a 50% chance. Because markets can either go up or
down. Exactly.
It's that simple.
They're very much random.
Exactly. So even someone who is totally fresh into the markets, because also trading is not a very, very hard job. It's not rocket science. We only have 2 jobs, buying and selling.
That's it.
So you can even just tell someone, okay, this is Safaricom. Are you going to buy it or sell it? One tells you, buy it. You see, but he doesn't. He's not done statistical research to look at how has Safaricom performed over the years. But buying and selling is easy. He can just buy and sell. You see, and I think that is also why trading. I feel like trading is like trading. The business itself needs a lot of restructuring. Because if most of us came into trading before we even put money, we knew about all this. You see, and I'm so sure even for our students. For those who take it seriously, for those who are motivated and actually want to do it right, I'm so sure most of them go and backtest. You see, but for us, like the structure of how just why most people don't backtest is because there's no education about the importance of backtesting out there. But how many people are saying just come and trade and make money?
Signals.
Very many
signals. How many people come and tell you? No. Before even, and I actually tell my students that I get some students and they're like, okay, see, as I learn, let me put $500 here. To start, No. This is you first actually learn the theory. Go now into the practicals. Now that is actually backtesting. So there's some now, as you say, you are trying out on dead stuff still. Then after backtesting, maybe you've noticed maybe this pattern has a better hit rate than the other one. This pattern has a better risk reward than the other one. You now choose to first maybe put it first on demo. See, now you've been simulating. That was simulation, like how people simulate on piloting school. So piloting school actually has that also sort of backtesting because everything you do is on the ground, but in a like a plane that is on the ground, but it has that simulation. So I feel you can feel the turbulences and all that. Then you demo trade a bit, maybe a month. Then deposit also some reasonable amount of cash. So if you want to deposit, don't even deposit. Okay, I always say you don't need to come into trading. You've backtested everything. You've done a lot of hard work. Then you come and deposit $5, $10, $30. You see, you will lose that money, and you will think that system is not working again. You won't say that I lost because my money was little. You see, you'll be like, okay, now these pivots are
they're not working.
Yes, you see, but the problem is you are now coming to test it in a wrong also environment. When you're backtesting, you had maybe you're using $10,000, $50,000. Now you come into real life also. Many things have changed. As you said, psychology may change, account size may change.
So actually
objectives may change.
Account size is also important.
Exactly. So also as you come into trading, maybe now you've backtested for a while, you've demonstrated. It's always good to deposit also a reasonable amount of money. And as you say, as PaperStone tries to tell their clients $200 is a reasonable amount of money to just start out in trading. Of course, you won't take that $200 into millions of dollars in a short while, but you will now trade that $200 at least knowing some of the things that you've seen from backtest. You know, maybe as I go into trading, maybe I need to look for this average risk reward. Maybe I need to get this number of trades for me to meet my objective. You even now have an objective. Ndio kitambo hatu an objective. Point was just to make money.
Yeah, true.
Yeah, because me actually, yeah, well, Ken, when you're trading, sometimes Ken used to have a month he's up 80%. Was that your objective?
No.
You just made the money, right?
What?
No. You just think
you had a month
about
that was up
trade.
104%. You see, because you're trading a small amount of capital, putting very, very big risks, no objective. So, but the fact that you are now winning, sometimes luck is on your side. You sometimes get big returns,
And that's one of the disadvantages of trading as well, because it sort of assures you on something that's wrong.
Exactly. And as I was saying also, for those people who don't backtest, is because their system sometimes wins, so they feel like it will win again sometime in the future. So backtesting is all about, for me, I can say, creating confidence in your system. So you need a lot of confidence in your system before you put money on it. If you're going to trade, let's say, $100,000.
Yeah.
1% of your risk is 100,000 shillings. How will you come and put just 100,000 shillings at stake on a pattern you don't know how it works in the past? You've just read on it on a book.
You don't know data.
Exactly. So I think also why backtesting is important is because the kind of risks we take in trading. You can't take such risks just by guessing stuff, by doing random stuff. Because 1% of $1 million is $1 million shillings. You see, so you wake up in the morning, and I always say this: risk only makes sense to people who are trading big money. Someone is not backtesting because he only has $100, which he knows I can get it the next month again. But the moment you know, I'm trying to get into a business whereby at a point in life I'll be managing $1 million, even $1 billion. You, of course, you have, like as you said, Ray Dalio, as he does it, he's not doing that research because he loves it. It's because the money is handling, the risks he's taking, he has to do the research by force. You see, so before we put $1 billion into this company, before we invest maybe into this economy, maybe now moving from States to China, we have to do research. Because I'm not going to China to put $1,000. I'm going there to put a lot of money.
Billions.
So, and it's investors' money. You see, I think most of the mediocrity that we do in trading is because we are so new into trading, we don't have enough capital, we don't have objectives.
We don't have guidance.
We don't have guidance, so you just end up just doing a lot of shenanigans. But the moment maybe you know how to approach the trading the right way, you even have a path of maybe how you get into money management, which, as I said again, you can't know all this before you make those mistakes, before you trade without even making those mistakes. Because also, if we come into trading and the first thing you want to do is to backtest, haungekuwa na that glued into it.
Yeah.
But for us, we came into trading, made some money, kwanza tukachapwa. Then that is when we knew, okay, there's an opportunity here.
Yeah.
But the moment you come into trading, like no knowledge, like how we give people knowledge, because we try to promote the right things and not promote the bad things, is at least you know where you can start right. For us, we didn't know where we can start right. Maybe even we knew we need to test these things, but I would like you to test. You see, because actually I believe we actually knew that you need to spend time learning a pattern, but we were all over because our interest was not even in the pattern; it was on making money.
Yeah.
And that is always the wrong objective in trading.
So forget the
we
money.
said, hey, trading is a very, very boring business. But the amount of even in terms of effort, the amount of effort it needs you to develop a trading system is years. You see, but the moment it clicks, all the money you lost doing your shenanigans, backtesting, comes back in a month, in 2 months, you may recover everything. You see, so good, like be patient about wanting to make money, and spend much time in understanding markets, understand patterns, create confidence in your system. Because for me personally, the fact that I know, I'm so confident in how I trade just because of it's a pattern that I love. You see, it's because I've tested it for 17 years on different different markets, different assets, and the hit rate has been good. So I'm betting on the data. You see, I'm
trading data.
I'm trading the data. So the fact that this pattern gave me this data, I know if I continue doing the same things, trading the same patterns, and that is also, as you're saying, trading is difficult psychologically. You have objectives to meet. You pattern yako that month haijakam. You know, like, asa, this pattern again, let me get into another one.
Yeah.
So trading also, it comes with a lot of that sort of challenges. I always say trading is not a game that you can solve it 100%. You will always make mistakes. Always. So, but the fact that you make this mistake, you learn from it, try to shy away from it again next time. Another time, again, the mistake comes, but you may just say another different cloth. So you also do that mistake again. But always, as I always say, don't do grave mistakes that will. Don't do mistakes that will take you to the grave in trading. Mistakes are allowed, risks are allowed, volatility is allowed, but taking very, very big risks while you have not tested that pattern, you don't know how this pattern works, you're not confident about it, you don't know the number of times the patterns can occur. Because also from backtesting you can come and realize, okay, let me not trade this pattern because it doesn't appear and I have objectives to make. So you shy away from a pattern that maybe it's a good pattern, yes, but it appears once in 3 months.
Exactly.
You see, and almost every 3 months as it appears, it's a win. So yes, it's a good pattern, yes, but according now to your objectives, you know, your objectives now is not to wait for a trade in a coming 3 months, then you trade it again for another maybe 3 to 6 months. So like backtesting gives you a lot of do's and don'ts. So do this, don't do this. Do this, don't do this. Focus on this, don't focus on that.
Yeah.
And I think that is where now consistency comes in. Like you can try even consistency, not even in the money, consistency in the process. Because you know I need to consistently trade this pattern. Consistently. Yeah. The moment you start doing that thing consistently, you will also see consistency in your results now. If you're winning, you'll just see that consistency coming in. If you don't know which pattern you're trading, you won't be consistent around something that you don't know.
Even your results.
Yeah, even your results also will be inconsistent. And I think that is what we majorly did when we were starting out in trading. Sometimes you make money, you make money in January, Feb, March and April there is no money. You see? And then you make another one, May. In a month, in a year, maybe you only had four winning months.
Yeah.
That is inconsistency. So we always promote for the other way around. In a year, at least, even worse, maybe have 2 to 3 months that you are maybe down or break even. But most of your hit rate in terms of months needs also to be high. And all this comes from if you do things consistently, which I think for our students, they are at a better place to start out. If you're struggling maybe with backtesting, if you're struggling with risk management, maybe you don't know the root cause of why you're losing, but if you go to backtest, if you decide to spend time now on backtesting the pattern, you'll just come and realize, okay, this pattern is not right. Because for me, when I was doing my backtest, I tested 2 patterns. And one pattern had an average hit rate of about 58 to 61%. The other one had 48% hit rate. You see, that is on backtesting. If you discount maybe your psychological problems in forward test, give it 5 to 10%, you're to 38%. You see, and I have an average hit rate maybe which is 1:2, 1:2.5. So I see that this hit rate won't make me meet my objectives.
Yeah.
So you now know how to skew things around. Like how do I adjust this? How do I adjust this? So for me, I now decided to eliminate the pattern that had a lower hit rate and focus on the pattern which had a higher hit rate. And that is how I ended up trading only one pattern. So I think that is one of the things that I say backtesting has helped me a lot. The fact that I'm now confident in taking the patterns I trade consistently. Even if I lose 2, 3, 4 trades, I won't feel like jumping into another system because I've tested it in the past. I know that even as I was backtesting, maybe you know now your consecutive winners and losses. So for me, maybe I know I have my system can go into a 5 trades losing streak. So 4 trades, 5 trades, I won't jump out of the system or chicken out or start losing confidence. But if before I had backtest, I used to start doubting myself when I take the next trade and stuff. But now, because you've tested it, you're confident, you always go for the short, even if you've lost in the previous trades. And I think that is one weakness that most traders have. They lose confidence the moment they lose 2, 3 trades. So that doesn't mean that your system is bad. Sometimes it can be your system is out of sync with the market. Maybe you trade contrarianly. Maybe and the markets are very have a very directional momentum. Maybe you're trading trend following. Markets are consolidating like gold now. You don't get those breakouts to 20,000 or to 15,000. Oh, sorry, 1,500 and 2,000. So you see, like that fact that you can still stick in your system, because maybe I'm losing because I've broken rules. I'm losing because this pattern is currently not working. And I think that is an edge that most traders can have. Like sticking with your system is actually an edge. But the moment you lose 2-3 trades, you chicken out, you start borrowing against strategy. You won't make it in this game. I think that is the point.
Because that's what I tell my students. Your system must only have 5 losing streaks in a row. That means Monday traded lost, Tuesday, Wednesday, Thursday, Friday lost. All week consecutively.
But also, to just add on to that, if you're following, because there are two things that normally happen when traders, when people go through losses. There's the one who deviates from their system completely, but then there's the other one who tries to recoup these losses very fast, and then they end up taking trades which are not part of the system.
And that is still breaking the system.
Exactly. Because for example, I don't think there's any system that any of us has backtested that produces a trade Monday, Tuesday, Wednesday, Thursday, Friday. So there's no way you've lost on Monday and you want by Friday to be back up. It can't work that
way. It doesn't even have to be Monday, Tuesday, but maybe this week you had 2 trades, losers. Next week, 2 trades, losers. The other week, again, the first trade you take that week, a loser again.
Exactly.
This is now week 3, you've just been losing. Do you think people will just be, okay, let's continue with this pattern?
Most people will chicken out. And that's one thing that was actually my next point. Most traders, when you're trading the markets, psychologically, what seems very, very important is the current trade you have. That is not even important. Exactly. That's what seems very important. Like to you, it's like, will this trade work? Like, will it get to my target?
Short-sightedness.
Is it a stop loss? Like, was my entry right? Like, you're so focused on that. But what really matters for a trader is the long-run distribution of outcomes. Right? You've had a winner, a loss, a winner, a loss, a winner, a loss, 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 winner, 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 loss, winner, winner, loss. If you can frame your mind to focus on following the process and to forget about the outcome, you can become a very good trader fast.
Forget the outcome, focus on the process.
Exactly. If there's something that will help you improve your psychological state of mind, avoid so much volatility, because much of the volatility in the account is the volatility of your state of mind.
It's actually your mind which is volatile.
Exactly. You're moving from fear to greed to fear. So your account in a reflecting, baka blow up inakuja say ile ilikuwa excessive greed. A blowout comes. But if you can just focus, the rule is simple. Like for me, my rule is simple. I'm looking for a set of things to combine to give me a setup. I'm planning to risk 1%. I'm planning to put my entries here. I'm planning to put my exits here. That's it. I don't care whether this trade is a winner or a loser. I want to take at least, first of all, and that's why we always say it's not right to even say someone is a good trader because of a month of price action or a month of trading. Even a year is too little. A good trader can only be known after a period of 3 to 5 years. Because this is someone who's gone through systematic ways of doing things. He's gone through a bull and a bear market. He's not given money back. So he has something that is working. That's why I always find it weird or at some point interesting when I hear traders just focused on passing the challenge, let's say for prop firms. Like, okay, yes, we'll pass the challenge. But what really matters is after you've passed the challenge, how are you going to trade? It's not just a matter of... Because I've seen people who actually come here. I passed this challenge. I have a certificate. I have $100,000. But if you ask them, okay, do you still have it? No. You'll be below after 3 weeks. Like, really?
What happened?
What happened? The rule was so simple. Like, don't go below 10%, 12%. If you're a good trader, that should be at the back of your mind. So like you're saying, there's your objective. And there's what you're trying to avoid. So in simple terms, let's say my objective is to avoid a 10% drawdown. If I've backtested my system and I know I can have 4 or 5 losing trades in a row, that system basically tells me you're not allowed to risk more than a percentage. Because if you risk more than a percentage and you have 5 losses in a row,
more than 5%.
Exactly.
Loss.
More than a 5% loss. So you can't really combine that and achieve your objective. But if you can be able now to come up with a system which After you've backtested, you have your winning trades, your losing trades. Let's say your objective is to return 5 to 10%. So you can know if I calibrate my risk, probably average risk reward could be 1:2, 1:2.5. Then you can calibrate your system or your risk, like you normally tell students. Have your risk tailored to attain your objective. Because also you want to make money. We trade to make money.
For sure.
If there was no money to be made out of this thing, not many people will be doing it. In fact, very few people. But the fact that there is some money or a lot of money to be made if you become good at trading, then gives us that incentive to think about it, brainstorm, contemplate about it, and come up with effective ways of doing things. You get? So another thing that I'd add on to, I think my last point on backtesting would be, one thing that I personally learned from backtesting, and that's one thing that I normally ask traders, to know how in tune they are with their system or how much they know about their system. The thing is, do you know the pattern of your winning trades and do you know the pattern of your losing trades? Okay? If you're not aware which trade is a winning trade, which trade is a losing trade, at the point of execution you can't know. But after the market running for some time, personally I can tell, okay, now this symbol is a losing trade. This is a losing trade cooking up, but this is a winning trade. I can just see it coming. But if you don't have that ability to know this is a winning trade or this is a losing trade, then it becomes very difficult to trade. Because I remember there was that point you were actually telling me, which was a trader needs to be good at reversing his trade when he's wrong. And you can only do that well once you've developed a methodology or you've done enough backtesting over your system to know that when I'm losing, this is just basically what happens. I normally show my students observe the pattern of losing trades. I just show them from my backtest. I just show them. You can see. And then I come and show them on the forward test. Look at some of the losing trades. And I'm able to avert some of these losing trades very, very fast. Because I can cut it just when it starts behaving like a losing trade. I want to cut it. Because most people, like you're saying, and at times I cut it and I'll be wrong. Probably it was a winning trade. But if the only time I cut it and I was wrong is 2 times out of 10, then I'll still keep on cutting anytime I think I'm wrong. Because 8 times I've saved money, 2 times I've maybe lost an opportunity. And if you think about saving 8 times and just losing 2 times, then you can be able to at least frame things in a better way. Because one mistake also I've seen traders make is they think about things in the context of perfection, and in trading you should think about things in the context of approximation. Like you always say, by and large. So if you use by and large, you say, if I have a certain habit, 8 out of 10 times it will lead me to the positive direction or to the negative direction. If it's the positive one, keep that habit. If it's a negative one, ditch that habit. Yep.
Okay. I think for me, as we end it off also, the most in backtesting, whatever level you are, how much you've traded, how much money you've made, backtesting never ends. You're always backtesting, you're always discovering something new about your system. The market is always changing and evolving, so your system must also change and evolve. So during that time, you also must go and continue backtesting new things. Like me, the way I backtest, it was just a plain simple system. And then inside it, you discover, okay, there are many different patterns, many confluences that work with it. So I tend to add that, like I'm building a house, I'm always just building it. I won't reach a level and be like, okay, now I'm satisfied. You have to go building, you test different things, risk different percentages, test it in different markets, do this and that. So to me, as we end it off, I'd like telling my students that backtesting will never end. You do this for the rest of your life. Even right now till today, we normally hear Gitosh saying, I've tested my system, my test, I know. I've gone down 50 years, I know. So as a take home, never stop backtesting, never stop evolving your system. That's something that will never ever end. Opening an account with PaperStone is easy. For those in Kenya, you only need your KRA PIN and ID card. Simple and easy. To register, click the link on the description below.
Okay, for me, finally, as we close up, I think it's important to tell people maybe where they can try to backtest.
Where the thing you found and saved us.
Yes. So personally for us, we use 2 ways of backtesting. We use both TradingView and a software called Soft4FX. But recently, PaperStone came in and we came to learn about smart trader tools. So PaperStone has an advantage feature for their traders. It's called smart trader tools. And when you go to the Smart Trader tools, when you scroll down, you'll find a part called Trading Simulator. So for it, it's called Trading Simulator. So if you're a trader and your broker is not giving you such tools to help you in your trading, quickly switch back to PaperStone, and now you'll be able to do the simulations on live market data on PaperStone. It's an MT4 feature. So I think I will put the link here for people to go and see how to get that trading simulator from PaperStone, which is a very, very good feature. I've tried it, but when I was doing my backtest, I hadn't gotten into it, but I've used Soft for FX. It's a paid feature, so if you want a free feature, just go to PaperStone and they'll be able to give you that feature. So I think we can stop there for today. It was a short one for today. We don't have much to talk about it. It was straight to the points and to deliver on how we can help people backtest and improve their trading system. So I hope everyone who listens to this and is trading will, if you've not backtested, will go back into backtesting, work so hard on their system, on their patterns, create confidence in the system, and finally maybe you will see your trading take a different route. I think we can stop there for today.
Yep.
Thank you, and thank you for listening to us.
Peace. Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.